What's up, everyone? Welcome to Blood, Sweat, and Balance Sheets. My name is Mike Whitmire. I'm the co-founder, CEO of Flowcast, inactive CPA. Today, joined by Stefan Van Dijvendyk, our accounting operations evangelist.
I thought we had a promotion lined up.
We're in 2024 now, so that you've lost it already. Demoted.
Happens to the best of us.
We've been spending the last 18 months or so going through a series of reports and putting together our own guidebook here. So I'm excited to chat through it today. Want to introduce yourself?
Yeah, my name is Stefan Van Dijvendyk. I'm the accounting operations evangelist here at Flowcast. But my background, like Mike, is also in accounting. Did my time at KPMG. I think you were
EY.
Yeah. So similar scars, right? Similar trauma. And then I cut my teeth at Skullcandy Inc. as their U.S. controller, and then went on to Flowcast. To Kodiak Cakes, where I found Flowcast, really loved it, and brought me here today. But what I love about the guidebook series is this is speaking to us as accountants. It's really uncovering our anecdotal stories and saying you're not alone, which I think is there's always that fear that you're am I the only one that had to go through this?
You are not.
Yeah.
You are not. It's very, very consistent. I forget, you found out about Flowcast at Kodiak Cakes, right? Not Skullcandy?
No.
Ah, okay. I just love those headphones so much. I had the Aviator Skullcandies back in the day. They were great with I love those headphones.
I still have a pair of my white Aviators from back before I even worked at Skullcandy. I got them at KPMG and I was like, yes.
These are awesome. I want to work there. I had the brown ones.
The brown one was good.
Yeah,
the old school look.
Yeah, exactly. Yeah, old school Aviators. Those are great headphones. Yeah.
Yeah, you got to try out. I don't know what they call the latest iteration of it, but they got some dope headphones. Their over ear Evo Crushers are pretty literally it is crushing your skull because it the bass in it's unreal because they have a magnet in there that moves with the song to kind of give you more of a feel.
Oh, jeez.
Yeah.
Okay.
So
well,
anyway,
they're good at what they do. Anyway, yeah.
I would say I've been lucky though that I've been able since KPMG. Not to say I didn't want to work at KPMG, I really did, but I've always worked at companies that I've really enjoyed the product on, and I feel like it's made a big difference in my career, which, interestingly enough, kind of comes up in the guidebook data as well. That can be a big impact on the user, the professional, and your ability to retain and recruit individuals is how do they feel about the company and aspects of the company.
Right. Okay. Cool. So, excited to learn more.
Yeah. So the first thing I'll point out to people is that a lot of people do these surveys and it's kind of a pay-to-play way they do it, right? They go to for-profit organizations that run surveys that are pretty much meant to capture data and prove a story that they want to be proven, right? But that's not how we went about it here at Flowcast. We really wanted to say, well, what is going on with the professional? What is going on with the industry? So that we know, hey, are we on the right track with our product? Are we on the right track with our messaging? Are we really helping individuals? Or are we just kind of solving something that, Mike felt and Chris felt and Stefan felt? And so we worked with the University of Georgia's data analytics program. So if you're a Bulldogs fan, that's great. If not, I apologize. I know some people.
If you can't beat the SEC, join them.
Yeah, exactly. So I know I was at dinner the other day with a friend watching an LSU Bama game, and I was LSU, they were Bama, and it was tense. So
I'm sure. I can only imagine.
Yeah, but we worked with them. We worked with Dee Wormuth. They're the head of the program. I think associate professor over there in Camden Cusimano, and they really dive into the data and get into it. And just a little bit of background before I move on from this is. Dee's done this for the Federal Reserve Bank of Atlanta. She's done this for massive credit card programs. This is what she does and what she loves. And for us, that was good because it just helped us understand yes, our anecdotal stories are true or are not, instead of just being oh, well, I'm glad you, told me what I wanted to hear type scenario.
Yeah. Quick anecdote. My wife used to work in market research. She would do sales for it. So she would be the one buying the data here, and I'm glad we went through a university and did it this way. There's you can get answers you want if you go to the appropriate sources. So the really true independent approach from University of Georgia here. But little fun fact: Allison sold market research before.
So she all about this and you've seen it, and that's where we're just trying to kind of do that. But we have 4 chapters on this. We did 4 different surveys over the last 18 months. The data's taken us a little longer, and that's come over the last year, but. We talked about kind of 4 things. We talked about we want to uncover what was going on in the profession, and we found out that there was a lot of burnout happening, and that accountants are quietly suffering in their roles, which I think a lot of us can like very really relate to. And that what I found particularly interesting is that this isn't just like, hey, the individual is in a bad place, their life isn't great. We've actually saw that it was costing the organization. And then we kind of transitioned that and we said, okay, well, what's driving this, right? And what Dee and her team uncovered was that the relationship with technology can be either a solution to burnout or can be a stressor. And this wasn't, she didn't really take this survey. She didn't create the questionnaire in the survey in a way to just like hone into technology. That came out independently from her research that was a stressor and a significant impact was their relationship with technology. And then, from there we kind of talk about, okay, well, how's that impacting talent and retention, right? One of the big topics, we talked about that in our 2024 predictions. We've been talking about that in our content for a long time. So how is it impacting that? We uncovered things from, both on the retention and on the recruitment side. And then chapter 4 was, Kyle's, who's our director of corporate comms and PR. This was his baby. And he was like, what, if you ask an accountant to dream, what is that dream state like? Which is like a pretty interesting way to go about like asking, like it's like a kind of hard question to go after and kind of a hard thing to go, but we found some really good data there. First thing I want to cover was kind of burnout in the close with you. So the whole reason you started this company was like pain points around the close, right?
I was burned out.
Yeah. So it'll be interesting to get your take here, but we found that there was as much as an 80% increase in the number of months the books had to be reopened if people had high burnout scores. So that is to say, burnout was looking at a multitude of factors of the persona and the individual. But like, hey, how willing are they wanting to stay? How satisfied are they with their job? How much is it interrupting like personal life? All these type of things. And Dee used something called the Maslach burnout inventory, which was originally created to determine if surgeons should be performing surgery or if a surgeon is too burned out from. People hear the horror stories and probably see it on TV shows where it's like, oh, it was an 18-hour surgery or whatever it is, right? Some crazy number. And it's like, yeah, I can't stand for 8 hours and do something like that and not lose a human life. So hospitals are essentially worried that surgeons were too burned out. And they said, well, if you're too burned out, you shouldn't be in an operating room. And we use that similar methodology on accountants. And we're like, oh, look at that. Accountants are like more like highly skewed into the burnout range. But we saw the first thing that it revealed that I thought was really interesting is it's costing the organization than the fact that, more like I think it was 4 months out of the year you were opening the books, 3.8 months out of the year you were opening the books if you had high burnout.
Okay.
So a third of the year you're saying that you have materially incorrect financial statements because you don't open the books. You don't reopen the books if you're like, hey, I forgot a $10,000 accrual.
Yeah.
Like I didn't flip an accrual or, hey, we had this weird thing in revenue. We kind of pulled revenue forward into this month when we shouldn't have. It was $100,000. You're like, we'll just explain that in the next board meeting. It's egg on our face, but it's not a big deal. To reopen means like you have a significant material error.
Yeah, it has to be material,
right,
to do it. So that means that's makes a lot of sense to me. So if you're a controller, you don't want to be reopening your books too much.
No. And it would be a third of the year, Greg would be coming back to him and be like, hey, Mike, what? We gotta reissue that board deck that we sent out last week. Is it that
late? So I wonder with this question, like at what point are you reopening the books? Is it during the audit? Is it, is this like, oh, we closed and then we found something later in our review and we reopened the book? I don't know if all reopenings are created equal.
That's true. That's a fair point that I haven't really thought of. And I don't know if we really asked the question in a way to uncover that, right? Like saying like, what's that time period? Is it, 10 days after books are closed, 10 days or less, or 20 days or more, whatever it is.
Like I had one audit client, I don't know if you had any like this, where they would say, we're done with the close, start auditing. And then they would bring us 40 adjusting journal entries afterwards.
Yeah, well, that's because they hated you.
Yeah, okay. That's what. So are they reopening the books, or are they like in their head? I never really knew how they defined that because they were like, start the audit immediately on day one, and then it was a fire drill every time they brought in an adjusting journal entry, and it seemed like they happened until the night before the Q or the K was going to go up.
Yeah, I think when you get to year end, it's a little bit different. You have those topside adjustments. So you're like, listen, books are substantially complete. We have some topsides on stock comp expense that we need a valuation to come through on, or we're waiting for bonus, like revenue numbers to be truly finalized, you guys to not have any issues, and then we're going to have a bonus accrual that we're going to push through based off, you know, company performance, stuff like that. The way I take this is, because we're talking about month-end close with this, is you know, you finished a month end and you got into most likely the next month of operations, probably closing the books in the next month, and you're looking at a reconciliation, you're saying, oh shit,
we missed that. Okay, that's a bad like. So if it's from a review after the fact and you're going back and changing stuff,
that's
like
what
unlocking your ERP.
Yeah.
Are you opening up the ERP again?
Yeah. Or you're getting to the board meeting or something like that. Someone asks a question on financials and saying, well, that just seems really high, or, you know, can you bridge that delta? And then when it comes back and they're said, oh, you know, when we bridged it, we found an error that was significant enough that the board wants you to, you know, reissue your board deck, right?
Yeah. It shows you have a bit of a mess in there. You're making huge, and then just how soul crushing is to think you're done with your work and then have to go back and redo it. That's I could easily see how that adds to burnout.
Yep. And I would say like my most stressful times is anytime I've had to open the book. Like nothing makes you feel, at least for me personally, nothing made me feel dumber as a controller than when I was like, hey, so yeah, you know that thing? And you're just like, hey, don't mind. You know, anyway, I'm going to slide this across the table.
Dude, the time I had to do it, so part of the burnout, I had booked my deferred revenue, my last journal entry. I was good to go, tied everything out, handed it to the auditors, and then I come back the next morning, and our finance guy comes over to my desk and is just like yelling at me, right? Like, this is way off. And so booked the entry in reverse.
Yep.
Deferred revenue was off by like $40 million, which was material to him, obviously. And he caught it as a part of an FP&A like budget to actual review, right? And it's like, I felt very dumb for doing it, obviously, but it's also as an accountant, you're like, you're so in the weeds. You're thinking about that transaction, like that's why the flux analysis process is so important, right? Because you're reconciling, you're booking your journal entries, and you're just in the weeds. And you're like, I don't even know what my deferred revenue balance is. Like, I couldn't tell you plus minus $40 million what it is, because I'm just worried about, is this contract recorded properly? And then when you flip it on accident, it comes out, you're not doing a flux, you're just going home because you're tired and you want to get your day over with, and then freaking finance catches it and you feel like a real idiot. You got to go back and redo a bunch of stuff. Hopefully the auditors haven't started work on that account yet, or else that's going to be a waste of everyone's time and money and everything. So I don't know. Yeah, I'm reliving some of my, gosh, that was one of the
trauma triggering.
Yeah, that was one. It's part of why, all the recs are, anyway. Yes.
Well, and that's, you know, it's one of those things where, you know, and I'll just say from my perspective is I found that having my team involved in actually like in the reconciliation that they were doing, not just doing the analysis to come up with a journal entry, but then, and not just doing the reconciliation, but actually having to do the flux at a low, like, you know, a staff or a specialist level, really changed the way they looked at the financials. And they went from really not understanding where they fit in the big picture. They just knew, well, I'm in treasury, I'm in AR, I got to do this. I'm in procurement, AP, I got to do this. And then saying, well, I need you to explain what occurred here, really just shot up their understanding of their place in the organization. So we talk to customers every once in a while. They're like, you know, we're not ready. My team needs to, like, you know, upskill, and they need to level up before I can really get a Flowcast or a tool like this in place. And I was like, no, what you don't understand is you need to give your team more responsibilities so they have better perception of where they stand in the grand scheme of things. So, side note, you know,
we literally had that discussion at Sweet World with a guy at the bar. Weren't you there also? You don't remember this? Been. He was talking about.
Well, it was at the bar, Mike. I mean,
it was at the bar. We were at. So I was sober at this one, but the guy was talking about his team and how he's wanting to up level them and upskill them, and a lot of them did major in accounting, and he was like very much resonating with the whole talent shortage message and everything, and he was getting, and you were like, make them do the flux. And, you know, from his perspective, it was like, well, they don't have the training for that. But I think you just got to throw people into the fire and be like, figure it out. That's like, no, I'm not going to train you for a year on how to do a flux analysis. Just here's what a flux is. How much did this change month over month, quarter over quarter? And you got to pick your head up and think about what you're doing, not just input. Because I think he was running like a billing team. And so it was really much just like piece of paper, enter this onto the next one. There's not much pick your head up with that, but your advice of making them do a flux and a budget to actual, I was like, man, that's a really good idea. Get them an idea of like the work that they're doing here. How does that feed into the bigger picture of and how it results in the flux?
And it's just one of those little things. It's like, I never thought, I did it out of the need to push that work down. And then I saw that it was like, oh, this is solving the problem that I've been wanting to solve for a while with my team. So it's kind of crazy how sometimes, it works out that way. You don't assume it's going to solve that at all. You had no idea. And then all of a sudden you're like, oh, this gave me a big benefit. I had no idea. That's where you got to try and iterate things. But anyway, huge tangent, guys, but good stuff.
Little bit of a tangent, but I mean, like, assigning that work off is going to make the controller less stressful, hopefully helping with burnout. The staff accountant or senior accountant understands the bigger perspective of why they're doing what they're doing. Perhaps they get better at that part of the job or have like a better understanding and just care a little bit more about the role. So maybe a good tangent.
It is a good tangent. And we'll circle back to it towards the end when we talk about how accountants feel like their future state, if they dare to dream what they want, because it gets back into that they wish they were more strategic. They wish they understood more. They had more perception. So yeah, you're right. It'll all come together. The other thing that we really saw that, and this I think is very obvious, and this is part of the burnout, is the percentage of people who strongly agree that the close conflicts with personal relationships is like 63% for high burnout, 20% for low burnout. So low burnout, 4 in 5 people are saying, yep, it isn't. Only 1 in 5 is saying it is. High burnout, 3 in 5 are saying, a little over 3 in 5 are saying, this is definitely hurting my personal relationships. And what's nice about this is it validates a lot of how I feel, but what's terrible about this is as a controller, as a boss, you never want to get in between your worker and their spouse or their personal relationships, right? Like my work for them should never hurt their personal lives, and yet you have in high burnout situations, most of your team is saying, yeah, like I have we'll say fights at home because of the workload that's going on. And or I'm like maybe just like not the same person that I am and people notice it and stuff like that. And like that's a terrible thing. And I think we need to take more ownership of that as bosses and not be like, well, that's the profession. Well, that's not a suitable excuse, right? Like you can't say that for any other profession, right? Like, casualties are never okay. So that's another one where I think people just need to take a little bit more responsibility there. The other thing we saw is that there was a really strong correlation between satisfaction and the close experience. And satisfaction is a really key element in burnout, right? Like if your job satisfaction is pretty high, your burnout tends to be low. And we'd also it will also impact that. And what we find is that if this is like going to be no surprise, but if a close is mostly smooth, people have really high satisfaction. And if a close is mostly chaotic, they have zero satisfaction.
Yeah, it is amazing how strongly correlated it is.
Yeah, like if I showed you the graph, you would just be like, yeah, there's nothing there. Like there's no happiness at all.
It's like a half-life down.
Yeah, exactly.
Wow.
And again, like anecdotally, I think we all understand that. It's just nice that we can say it's not just you, it's not just your industry. This is pervasive across the profession. And then when we got into chapter 2, do you really want to look at what's impacting burnout? And what she dove into is she found that the way we look at technology and the relationship we have with technology as users, as accountants, really significantly impacts how we feel about our job and how our burnout is. And so she had this whole thing of really shifting mindset, and she was able to kind of uncover this in the data. So looking at technology in this really siloed space of saying, hey, it's a technology system to it's a technology solution. And it's like, it's a little bit of play on words. You're like, what's that really mean? Well, we look at system and we say, well, it's, an integrated system. It has maybe a moderate integration score. And what I mean by integration is like, is it connecting not only to your ERP, or is it connecting not only to your EDI platform, but is it connecting to your email? Is it connecting to your messaging platform? Is it connecting to your cloud storage or your however you're storing your data and your information? Does it really connect holistically within your environment and not just to what seems to on the surface the key programs it needs to connect to? And we find that if it just is the key things, that's just a normal half integration score. But full integration would be it's connecting across your ecospace. And a solution is highly integrated, connects across everything, whereas a system, what we often see implemented at companies, just connects to the key things and probably not very well. Like there's quite a bit of work that has to go into it, significant customization, which listen, customization is always going to be there. No one has every business environment is unique in some way. But if theirs is so locked down that you have to do significant implementation and customization, or you have to put a system in between theirs and yours for it to talk, you got a problem there. And shifting our focus from, well, how good does the technology perform? How well does that technology perform? To how well does the user perform?
Yeah.
Right. And this is something that when I was the controller at Kodiak Cakes, like we would have heated discussions on that when we were kind of growing is, you know, some people were really focused on, well, this tool looks like it does really awesome things. And I'm like, yeah, but it's like really complicated. And do you think our sales professionals, our AEs, are going to be able to use this appropriately? It's like handing a 16-year-old a Ferrari and say, have fun, kid. Like, yeah. They're going to strip that out, you know, like they're not going to be able to like, you know, drive that thing at all. I mean, hell, I probably can. And instead of saying like, hey, let's get you on something that works well in your system, because then we looked at other solutions that maybe weren't quite as complex, but marginal difference in my opinion. But the user interaction was drastically improved. And shifting the difference to that, and you know, IT is really always focused on that. Well, how well does it perform? How complex can it do things? And we maybe need to take a step back, or we can see the data to look more at how well it performs, and that had a big impact on, you know, the technology relationship.
I mean, I think, is it making the user more efficient?
Exactly.
That's all it boils down to. Like, are you taking work off the user's plate?
Yeah. And what we kind of came out with is Dee kind of rolled it into 3 types of relationships. She said, do you have a routine relationship with your technology, which is, you know, it works, but you kind of have to work around it, and it has, you know, limitations, which I would say is most of the technology I had to work with, right? Is it adverse? Is it an adversarial relationship where you have to do significant work to get anything done, which I've seen a whole lot of that. But in my time as an auditor, there were so many companies that were like, well, I do all this work in Excel and then I upload it, or I have to like download this, change all this stuff, and then I can get a journal entry. And it's just like, it really isn't doing what you want, but it's the only thing you have. And then the last one was synergistic, which is, it's form-fitting. It's like a glove. It does things the way you want to do it. And not just like, hey, it does the thing. It literally does it the way you want to. So I'll give out an example of this. Like most ERPs, when they do the calculation of fixed assets, PP&E, they say, well, you said over 60 months, right? So it's 1/60th. We find that percentage, and we apply that every month to the balance that you have, right? And that's how they depreciate. They don't actually set up an amortization schedule. And there's a huge difference between that, because the math to revalue that asset, if something goes on with it, maybe you had improvements, maybe you need to add more to it, or maybe you devalued it, or whatever it is, right? Whenever you have to actually change the useful life or anything on the asset, the math never works out to where the asset depreciates correctly going forward. It never works. You have to write the asset off into a P&L suspense account, and then you have to recapitalize it and create a whole new asset. And it's super confusing. It's a lot of work for you. It's super confusing for the auditor. And it's because it doesn't do the work the way it's supposed to do it. It's doing it the way a technologist wants to solve it. And that's like a key difference there, is like a synergistic tool or solution would do it the way you want.
Now, can I play that out for you a little bit more?
Yeah.
AI is going to come around. We're going to need data. AI is going to train on the data that lives within your system. How is AI going to interpret that reversing transaction, recapitalization, everything that, you know, is it going to interpret that as being a normal course of business? Is that something we do? Why do we? So it's those like uniquenesses and needs to record manual journal entries that leave me some pause around how much AI is going to be able to automate if that's not like well documented and understood that that's not a normal thing that we do.
I mean, I still remember when I first started an audit and I saw a reversing journal entry. I was like, what the hell is this?
I remember Christine was her woman, the one who explained a reversing entry to me. I'm like, huh?
Yeah.
Okay.
I felt so stupid.
I guess. Yeah. No. I mean, it was my first week. I felt like a real idiot. Same. But yeah, I went back. I was like, I went to my boss. Can you explain this to me again?
I was not only told by the client I was dumb. I was told by my boss I was dumb. I was like, I've never seen one of these. I didn't. This wasn't covered in my accounting program.
Dude, it was my client, and it was basically like oh, bless your heart. Let me teach you about reversing journal entries. You 21-year-old kid trying to figure this stuff out. And how much do we pay
for your audit? Yeah, exactly.
Totally. But she was great, Christine. She was awesome.
Yeah. But to your point, I mean, like it's confusing for users that should know what they're doing to see that stuff, and then, you know, if you train it to just say, oh, yeah, it's fine, well, then you might actually have one that reverses it's incorrect, but because you trained it to say it's fine, now all of a sudden all this stuff's going through that you shouldn't. It takes a lot of judgment to know. And so I think that's an excellent point where if you have these weird things that you're having in there, you're preventing the automation from really being able to help you out. So you need to clean up the playground as much as possible.
Yeah, you need clean data to be able to automate stuff.
Yeah. So yeah, it was really interesting to kind of see her, what we found in chapter 2, which is, hey, we need to shift our idea from, allowing for routine relationships, and we need to have synergistic relationships with our technology. Like that's really the end goal. And in order to do that, we need to shift from looking at technology systems, and integrate it to technology solutions. Like that's the big change. And that is focused on the user and how the user wanted to interact with it. And it's focused on your environment and not just, hey, it's checking boxes really well. And that's what we want. And it's a subtle but important nuance in the process.
Yeah.
So that's what we really, we saw a lot of in chapter 2. We saw other interesting things there. Like we saw that the technology relationship correlated very strongly to the burnout relationship when we talk about costing the organization, costing the professional. So if you have routine relationships, and we'd say like that'd be maybe medium burnout, or if you have adversarial relationships, so high burnout, if you kind of pair those together, you are opening the books at least 3 months out of the year, right?
Okay, there's correlation between those two as well.
And that just helps us prove out that, because correlation is not causation. So you want more levels of correlation to really say, yeah, I do have a cause here. And essentially because we're seeing that, it makes us feel a lot stronger about that. Burnout is impacting the organization and technology is impacting the organization. But if you have synergistic, you're only open at 2 or less months out of the year, which is kind of crazy. And the same thing with personal relationships. So I think it goes to show that what technology you select can truly impact your financials, truly impacts the decisions people are making on the financials. Because if you're opening the books, you have a high chance that you made an incorrect business decision because you had incorrect data, right? So if Greg comes out and says, and I shouldn't name drop Greg like he ever has errors. That's not fair. We'll say Never. If Stefan comes over to Mike and says, "Hey, Mike, I got to open the books again," and it has something to do with revenue. It's like, well, I might have just set bonuses for the year. I might have said, "Hey, let's lean into this market because it was doing really well. This vertical's doing really well," and then I flip it on you, say, "Actually, that vertical did really poorly," and you're like, well, I just approved an event. We're like going, we have marketing spend now because I thought it was doing well.
Yeah.
And that's how it costs the organization. So I think there's a lot to unpack there.
I love how much this correlates with the personal life. Gosh. I like to think we're synergistic, and if we are legitimately making people's lives better, that's pretty amazing.
Yeah, and that's the thing. And I think that's why you get such good stickiness with customers and stuff like that is they maybe unconsciously realize that like, no, this has impacted who I am as an individual.
Yeah. I love seeing this, man. It's just like a little behind the scenes. VCs early on were always like, what's the ROI? How are you going to justify this? Like, where's the productivity with all those stuff? And in my head, I'm just like, accounts just work so much. Like the ROI is they get to go home a little bit earlier and hopefully they're happy and they're not as burnt out and stuff like that. And to see it playing out in the stats is really, really cool. Makes me feel good about what we're doing.
Exactly. And you can still drive it back to the ROI to the company because them being better and happier clearly prevents errors. And that's costly. That's a huge thing. The other thing that we show is that the technology relationship, and I promise this will be the last thing I say about it, is it actually impacts the whole persona. So this is something that I actually find maybe most interesting is it doesn't just impact burnout. It doesn't just impact company performance, but it's impacting how you feel about how competent you are at your work.
Oh, interesting.
So if you have a synergistic relationship with technology, you have a very high level of personal competency. You think, I am good at my job. I am capable of doing my job. You actually find that more often than not, you have enough time to do your job. You're not feeling like you're as burdened as much. So it's impacting that whole part of your persona. It impacts your voice within the organization. If you have a synergistic relationship with your technology, you feel like you have a strong voice in the organization. Adversarial, you feel like you have no voice in the organization. Same thing with income. If you have a synergistic relationship, you think, I actually might be paid fairly. Whereas if you have routine or adversarial, you're like, I am definitely not paid enough for this crap.
Oh, interesting.
Because you are struggling against your technology, right? And you're not spending time being strategic. You're not spending time being valuable. You're spending your time just trying to be tactical and get the work done, right? So I think people just need to consider the fact that it's like, this isn't just about the organization. This isn't about personal. It's about how well your employees feel paid, which can be a big cost driver in your organization, right? Their ability to be impactful in the organization, which is like, why would I hire someone if they can't be a strategic asset? If they're really just checking a box, it's like, why are they here, right? I want human judgment. I want human interaction. That's why we have a role. So it's just more levels to consider with that.
Yeah.
I really loved this series. It was a lot of fun to go through. And then when we got to chapter 3, we started uncovering recruitment and retention, which I think is obviously huge. A lot of people have been talking about this, and we found some really interesting facts and figures here. But an employee's fulfillment and their belief in the company's ability to provide the right tech stack matters significantly in retention, right? Like when we look at it, if people really believe that their company is able to select and implement the right technology, their belief in the company is very high. It's like 76%, right? If you just take that down one level from strong to some, it drops to 38%. It drops in half, right? Like to where all of a sudden people are like, oh, I'm actually not that confident in the company. So it's a precipitous drop. What's funny is if you go to, they have no confidence that you can do it. It's at 36%. So it kind of has this like sticking point at the bottom that it's like, you just don't believe in them and you don't care.
Yeah, I think it's like very it's like you either do or you don't here. Yeah. Is what it's 76% if you believe, it's below 40 if you don't.
Yeah. And then like if you're not sure, it's lower at 25%. You're like, if you're kind of up in the air, it's a really low belief. But if you have no belief, you're just like, yeah, I just accept this company for not doing well.
I interpret not sure as like, I don't know, whatever. And so you're not going to care as much. But if you have none, you're like, no.
Like they don't know what they're doing.
They don't know what they're doing.
Yeah. And you're just like, man, it is what it is. And I think it's just like this reluctant acceptance of it.
You're resigned to the awfulness of it. Oh, you're man, like, that's sad to see.
It's rough, right? That's like that's truly being defeated, right? Like that's what you're saying. But we just see that like your ability to put the right technology in place really does matter to your employees pretty significantly.
Yeah, this is a big one where I really feel, and it makes me happy that when we started Flowcast, it seemed like a lot of buyers would allow the users to have a really big say into what they're purchasing. And it's like, for us at Flowcast, the users love Flowcast, and so selfishly during a sales cycle, we like to bring as many users into the demo process as possible to get their buy-in. And then what we found is it was really nice. A lot of CFOs, I'd reach out to them and they'd be like, I'm letting the controller make the decision, or I'm letting their team make the decision or whatever. And we've heard that so much now over the years, which I think it's a really smart approach, because like then the team can't get upset at you for picking the wrong solution. Like let them make their pick, and then they made the choice. Now it's up to them to use it, to embrace it. They want. Totally.
Yep. And I think there's a lot to be said about that. And I think it's it's been a long time coming for business leaders and executives to learn that it's like, empower your team, let them make the decision, because a little bit of it is, well, they made their fate, right? And two, it's like they're boots on the ground, so they can really understand like what their pain points are a lot more clearly than we can at the top, unless they maybe just don't have any perspective at all because they're new to the role, or they're it's a new thing in the organization.
Yeah, with software decisions, I like really believe in feedback at the ground level from the user of it, and I'm now thinking about Flowcast and just like all across our organization, all the software we use, regardless of just accounting. But huge part of it.
And when we look at that then we kind of like correlated that to people staying within their organization. So not just like hey, their belief in the company, but professionals. When we look at fulfillment, we also see a similar score that if their fulfillment's very high, to stay is very high as well. And it drops off pretty precipitously, where it's like if your fulfillment's very high, you are very likely to stay. But if it's just high, it drops to just above 40%, right? So they're a little more likely than not to leave. And if it gets to average, they are pretty likely to leave. It's like below 20%. So it's kind of crazy how much fulfillment can also impact your ability to keep someone there. So we see a strong correlation between those things. And then when we look at recruitment, we see that it's pretty likely now that people will talk about technology in the interview process. Like the interviewee, the person that you're looking to recruit, is going to ask what technology you're using and make judgment based off that. Totally. I know I've made that judgment in the past. So when I transitioned from being at Skullcandy on SAP to going to Kodiak Cakes on NetSuite, I had to think about that because I was like, I really know SAP and I'm really good at it. Do I want to completely relearn a new ERP? And that was something to consider. And it wasn't just about relearning. It was like, well, can I be successful as a controller trying to be rapidly grow a team within a rapidly growing organization if I'm behind the 8 ball trying to learn how to use the system, right? So it was about my success and then how that would impact the organization. Is the organization going to be successful if they have a controller that can't do this? So that was something I thought about and I asked about. And then when we were trying to fill roles, we had a really hard time filling AR specialist roles. I don't know what it is. Like we're up in Park City, Utah, which is beautiful, and it's really close to Salt Lake. It's like a 20, 25-minute drive. We're in Park City, Utah. We have a great product and brand that people love. I felt like we were competitive with what we were trying to pay people. Like I wouldn't say we were on the high end, but it was market. And we had a great culture, right, internally, and yet we could not find people because of the Great Resignation. How many people are leaving accounting and not interested? And finally, one of the big factors of getting to get someone to come on was that they knew that we had Flowcast and they liked Flowcast.
Nice, all right.
And that's a big thing. And there was other factors of that. Well, I mean, they were loving the brand, but like I didn't really realize that just a little part of my tech stack could impact who I had coming onto the team, right? And I think today, if I went back to a company and I said, hey, are you looking for a VP of accounting or whatever? And, I talked to them and they're not really interested in investing in the right technology. I'm probably not interested in going to that company.
Totally.
Right? So there's been a change in the marketplace that has really come up in the job interview and the level of importance they place on that has increased.